Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square for instant reaction to the Federal Reserve rate decision, we have Chris Dearborn. He's the managing director on Nasdaq's Market Intelligence Desk. Chris, great to have you with me as always. And you know what? Not much of a surprise. No rate change. Stocks really did not react that much, although the Dow just went into the green. So I think everyone's gearing up for the presser at 2:30.
Yeah, it's really a kind of a slow March. It's really been a benign week, all week for trading. There have been some headlines, really more perception of the U.S.-China trade talks. That's been a little bit of speculative. There's a fair amount of risk-off sentiment that we're trying to work our way through. Really, trading volumes have been light all week. The market's been relatively flat all week. Really, since last week's Friday, the labor report was really what kicked this market back in, put the S&P in the green for the week last week, with the Nasdaq and the Dow just finishing just off. The Russell had a good rally this week. We haven't seen much of anything to move it so far. CPI came in a little bit better, which was good. You got UK elections tomorrow, PPI tomorrow, retail sales, so a lot of risk-off potential items. That being said, the Fed really engineered a nice soft landing here, and what we're looking at is no rate hikes for next year expected. And with that, what you're looking at is a bottom in the floor. There are buyers here. People are interested in seeing what's happening. The markets are moving a little bit higher. Granted, the Dow is getting beaten up because of Boeing and Home Depot today a little bit. Remember, the Dow is a price-weighted index, not a market cap-weighted index. The Dow carries much more weight there than, say, like Apple or Microsoft with their trillion-dollar valuations. So it's really not a great barometer of what's moving the markets. The S&P is a little bit better there. We're up 0.25% right now. We've been flirting with this higher end of the level here. If the market trajectory keeps going this way, depending on what happens starting at 2:30 with the press conference with Chairman Powell, we could see a higher close, which would be a nice boost midweek.
Yeah, I mean, you know, the narrative is certainly different from December 2018. It's carbon copies of excuse me, they're actually an about face of what they were from last year. And if you think about it, the major indices, major averages, they are 1% within all-time highs.
We haven't moved away from
that.
So
let's take a look at our longer-term chart here. This is S&P 500. I believe it's a 2-year.
It is.
So here we could discern a little bit more longer-term trends.
Right. So what you're looking at here, especially smack dab in the middle, is what happened last fall into Christmas Eve. The big sell-off after the last rate hike. And really what that was the market was not ready for that. A lot of participants thought that this was going the wrong way. And the Fed, after they did the pivot, immediately afterwards, you've seen the markets really rally back to all-time highs. If you look over the course of 2 years, the S&P has been on a nice trajectory up until they thought that they raised rates too quickly, too much for what's been going on here in the marketplace. And with that, what the Fed did today, with everybody agreeing that 1.5 to 1.75% is the right place for us moving into next year, the markets have legs once again, and we're trading at all-time highs. And this trend should continue, barring any black swan event or barring any rhetoric between China and the U.S.
Yeah, we'll see what happens on Sunday, December 15th, when they could potentially put those tariffs back into play.
Yeah,
Let's take a look at our next chart, though, because you certainly have to watch the dollar anytime you have a Fed presser out there.
Right, so the dollar sold off immediately on this press release as expected. What you're looking at here is the dollar over the course of the longer-term chart. Brian did a great job of putting this together, has been in a trading range for the last 4 years. And we're at the top end of that range right now. Expect the dollar to sell off a little bit on this rate hike. If that does, that could put downward pressure on U.S. equities. And if that does happen, that could be a headwind to the markets here. You've seen good strength in the market, really in the Dow, not the Dow, the dollar. We're really 90 to 100 here against the basket of currencies. And if the Fed twist kind of works out the way it's supposed to, it's a very dovish sentiment. Dovish sentiment means a lower dollar.
All right, we'll see what happens next week after we get the tariff decision. Thanks so much, Chris, for joining me as always. Thank you for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.